You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we're back for episode 2 of the bi-weekly options extravaganza known as the Option Block, what the cool kids call the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hope you heard the Options Boot Camp yesterday where we announced the winner of the Options Pro Trading Crate, all the cool, unique, bespoke stuff we're going to put in there once a month to our pro members out there. I do believe the winner was John Vieser. Hope I'm not butchering his name, so our producers should be reaching out to you as we speak to get your shirt size for your unique Options Insider gear. Also give you your selection of educational choices that you want included in your bespoke box, and then we're going to put a bunch of other fun stuff in there. That's at our discretion. All sorts of cool stuff from the unique landscape of options-oriented items that we have here in the studio. And trust me, they are cool. They are unique. Some of them, pretty much, these firms don't exist anymore, so they're completely irreplaceable. The value of these boxes, inestimable. You can't really make them anymore. So it's kind of fun. That's why we do it once a month. It's a bit of a labor of love for us. It's certainly an expense, but we like doing it for you folks over there in the secret handshake club. If you want to see what it's all about, theoptionsinsider.com/pro is the place to go. And speaking of going, Uncle Mike had to go on assignment today, so he is off. I'm not sure where he is. Maybe we'll find out later on where he had to go on his super secret assignment. So no super bullish ray of optimism today. Instead, we go out to the dark side, a.k.a. deep to the heart of Texas. We are joined once again by the deeply cynical Mr. Meatball, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. How goes your deep-rooted cynicism today, sir?
Oh, I've never been more cynical in my life. I'm at the depths of my cynicism.
Yes, the depths of your cynicism. Well, we'll see if we can turn that around as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we do just that. We break down what the heck is trading, what is lighting up our screens, kicking off the show here. And seems like mostly green on ye old screens today. The S&P is actually playing the laggard role today, only up about 1/3%. The Dow right around 0.5%. And the NASDAQ once again leading the charge up about 0.6%. So still firmly in that green camp. There was a little bit of concern earlier this week. You know, we were talking on Monday's show about this weird environment where the markets were kind of moving up, but so was vol, and there was a lot of other signs that perhaps there were other shoes waiting to drop. So far, at least throughout the week, we haven't really seen those shoes materialize, but the week is young. The trading year is young still, even though we are a good chunk of the way through it. There still is a lot that could pop off. We've seen it over the weekend. We've seen literal weekend risk these days, so that other shoe could drop at any time. The vol products, though, not really reflecting that right now. Coming into Showtime, we had VIX right around a 17.5, puts it down about 1.25. I think it got even lower, down about 17.25 or so. That puts it down again about 1.25 from where it was on Monday. So some of that juice that they were putting in that we were kind of scratching our heads like, they're taking that out today. VVIX at about a 112. That's down about 5 points from where it was on Monday's show. And VXX, a product that usually likes to erode lately, it's kind of been hanging out around the 30 handle. Today at about a 29 again. That puts it down about 1.25 from where it was this time last week. So getting some of that erosion juice kicking back in. And VolQ really moving down about a 16.5. That puts it down 1.5 from where it was this time last show. So Mr. Meatball, there's a lot to talk about on the show today, a lot to unpack. A lot of things are popping off. But before we even get to all the madness of the single names today, let's talk a little bit about that. Because I know on Monday you were a little bit concerned, when we see the S&P and vol moving in lockstep. Usually maybe there's some other things lurking behind the scenes. Have your thoughts evolved on that since Monday's show, sir?
Well, yesterday we were down 20 and the VIX was down. Today the S&P's up. VIX is down a little bit. Things have definitely eased off a little bit. But I'm still concerned. We're still nicely positive month over month. The market's still positive. I really need to see the VIX kind of full on collapse before I'm willing to throw in the towel that we're in the clear here. Just the market still seems really edgy, really unsure of itself, and being carried primarily by just a few names, not a market-wide surge, although today has much better breadth than some of the rallies that we've seen over the last couple of weeks.
Well, speaking of those rallies and those surges, a lot has been popping off since Monday's show, sir. What has been lighting up your tape out there?
Well, I think we'd be remiss if we didn't bring up Robinhood, the Robinhood IPO.
I'm sorry, is something going on with them? I'm unaware, sir.
And the fact that they listed options and how crazy the vol is. And, it was up 20-something yesterday. It's down 10 today. The stock is definitely flying around. A ton of earnings names that have been coming out this week. AMC, there's big news on that one today. It was getting trashed. It popped on the open, then got trashed, and then has rallied again. Why? Well, a hedge fund leaked that it was short, and so the Robinhood army came off of it. But one of the things that I think is really interesting is that I'm noticing a correlation between the performance of GameStop and AMC relative to Robinhood. So today Robinhood is down. Those two names are up. Yesterday, Robinhood way up. Those two names got absolutely obliterated. So I'm wondering whether there's money flow coming in and out of Robinhood and in and out of and into and out of GameStop and AMC is in what would definitely be dripping with irony is the platform that was used to pump GameStop and AMC going to own stock going to be what kills the short squeeze in AMC and GameStop. It's I think the most important question we should be asking ourselves if this negative correlation between Hood and AMC and GameStop continues. I think the answer is absolutely yes.
Yeah, we can't really can't bury the lead here. It is Hood out there, which is a good handle, by the way. I do like it. But yeah, there was a lot of talk. All the meme kids were up in arms for quite some time with issues upset at Robinhood. They were very angry at it. FINRA, of course, leveling a historic fine out there. We talked about a lot about that fine on this show a little bit, but more on Options Bootcamp. Actually had some defenders for Robinhood come in on the most recent episode of Bootcamp. So check it out if you are intrigued. That was an interesting little conversation we had there on the show yesterday. But of course, the options are live now, so we can talk about. By the way, people are sending us this meme joke, which I do kind of like. Would investors buy Robinhood shares after a disastrous IPO? Yes, they sure would. Get it? Sure would out there. But, that seemed like they beat it up after the IPO. It seemed like, all this Wall Street bets army, this meme stock army, Reddit army, call it whatever you will, seemed like they were firmly galvanized against Robinhood. And it seemed like they were maybe going to drive this thing down as a bit of a symbolic gesture. And what do? It's exactly the opposite. The same people who were lamenting and getting so mad at Robinhood are also the ones clearly out there bidding it up. People are making the analogy to Mary Shelley, the creator of Frankenstein's monsters, or Robinhood platform kind of created this meme stock beast. I think the analogy is a little bit flawed, though, because Mary Shelley, her monster was destructive. And in this case, the Reddit meme kid monster really just creates value for a lot of these names out there. So it's certainly creating value for a lot of Robinhood investors out there. People were talking a lot about the 70 calls that was making a lot of headway out there. But of course, downside puts also pretty active out there. We did see Robinhood hit a high of 85 in the big surge yesterday. Got suspended by NASDAQ. That'll happen when these things pretty much rocket 80% in a day. We saw over 290,000 contracts going up yesterday. A range of strikes between 70 and 20. That gives you some idea of what's going up out there. Speaking of what's going up out there, Mr. Meatball, I'd like to get your thoughts on this as well. You guys have been saying for a while, hey, where's our question of the week? Where's our poll? So we brought it back for you this week. Seemed like Robinhood was a good one to do it on. When we posted this poll, the stock was hovering around $60, and the at-the-money straddle for August, so just going out a few weeks here, was trading about $18. That puts it at about 200 implied volatility. We want to know, just quite simply, are you a buyer or a seller of that straddle at these levels? So you want to buy it, you want to sell it, or are you just saying, get the heck out of Dodge? I'm not touching it. This went live right before showtime, so we have some early numbers, Mr. Meatball. But I'm curious, what are your thoughts on this? And then B, more importantly, where do you think our audience is lining up, sir?
I got to be honest. I think that August straddle is probably fairly priced. This thing is going to fly around. I think Robinhood's going to go to 100 eventually. It could be in the next week or two. And frankly, if you think that straddle is expensive, the wings are even more expensive. The way out of the money stuff was absolutely bananas expensive. I have a friend that was an investor in Robinhood. He said, well, what should I do? And I pointed out that he could risk reversal off. That means he could or collar his stock for a pretty nice credit in some of those back months. We were looking at February. You could buy with the stock trading 60, you could buy the February 40 call and sell the February you could buy the February 40 put, which is $20 out of the money, and sell the February 100 call and take in like a $3 credit on that collar. That is a ridiculous upside call skew in Robinhood. So, if you think the straddle is expensive, then buy the straddle and sell the wings. There is money to be made in that trade.
Collars for credits. I will do that all day long. That's a nice thing.
Exactly.
That's like, you see that maybe once in a while in like the ags on CME, right? Like soybeans have done that in the past.
But and think about this. The 40 puts are $20 out of the money. You're selling a call that is $40 out of the money. So you're looking at 50% upside, 50% downside versus a 65, 70% upside, and you're taking in $3 to put on that collar. That is absolutely astronomical in terms of, the ability to put this thing on and hedge. It just tells you how traders are structuring this and viewing the future of Robinhood over the next few weeks and months. I personally do think it's going to 100. The buy rights and stuff like that are absolutely bananas. So there is tons of opportunity to trade Robinhood. For instance, here's a play. If you think Robinhood is going up, I can buy the 60 call in February for about $18.80 Go crazy, call it $19. Well, sounds expensive until you realize you're getting over $10 for the 110 call. So you can put on a 50-point vertical for less than $9. And long at the money. You shouldn't be able to do that, folks. That is how kind of bananas ball structure is in Robinhood.
That's the takeaway, right? You should not be able to do this. People who are new to the options landscape, and there are a lot of them, I know they're listening right now. I mean, a lot of people have joined the world of options in the last year, in the last 6 months, for God's sakes. This is kind of normal to them. These upside calls would be crazy bid. And you could do collars for credits, or like you mentioned, crazy verticals for credit. This is not the way it's supposed to be, listeners. So this is an extremely aberrant scenario. If you know what you're doing, you should definitely be looking to take advantage of some of these discrepancies. If you're still a little bit not that sure-footed yet, don't worry, you'll get there. But maybe you stay clear of the 200 vol level names for a while there until you get your options sea legs, if you will. Let's go on out now, see what's actually trading. Let's see what Hood is actually up to out there today. Before we get there, let's go on out to the major indices out there. We've got VIX doing nearly 200,000 contracts today, about 191,000. So not even half of its ADV. Its ADV is 458,000 right now. So a little light in VIX land today. SPY, similar deal, actually pretty light in SPY. 1.3 million contracts on the tape right now. The ADV is about 4.25 million. So it's got a ways to go to hit its ADV today. The S, similar story, 484,000. The ADV is about 1.4 million out there. The Q is 538,000. The ADV 1.35 million. Only place where we're seeing some sparks of life really out there in small caps. IWM over 400,000 on the tape right now. The ADV 686. So that's a little bit closer to its ADV than some of the other names on a percentage basis. Here, let's go on out to our most active names. It cost you 246,000 contracts to break into the top 10. And if you're saying, oh, I bet your Hood is there, actually not. You got to go down to number 20. Robinhood is actually number 20, which for a brand new IPO and a brand new listing in the options market, nothing to sneeze at. 162,000 contracts is what Hood has put up as of a few minutes ago. But if we jump up to our actual top 10, got some drug-related names there in the top 10. Cost you, again, 246,000 to break into the top 10, so just shy of $250,000. That gets you to Pfizer. Pfizer, number 10. Number 9, a related name, Moderna. 287,000 contracts for number 9. Number 8, the will they, won't they, is it not a meme? It don't care, it's doing some paper. Ford, 305,000 contracts on the tape. There's some big news, obviously. It looks like the Biden administration talking about making, I think, half of all domestic car production electric by 2030. I think Ford signing on to that, bunch of other slant. All the big manufacturers jumping on board. That's clearly lifting Ford today up nearly $0.50, 40 cents to $13.72. Still a far cry from some of these optimistic strikes we've been seeing going up there for a while. The 20s, the 17 halves, the 18 halves, 19s. So not quite there yet, but maybe a 15 could be in the offing somewhere around there. Number 7, NVDA. It's kind of a perpetual top 10er these days. 445,000 contracts. We're getting some paper now here, listeners. Number 6, it's Square. 458,000. Number 5, Mr. Meatball's other favorite there, AMC. 515,000 contracts. Number 4, we got Uber. Uber in our top 10 for the first time in a while out there. Uber had earnings recently. They beat revenue, but they also have a bit of a profit hit as they're trying to get their riders back. They have a lot of inactive drivers. It's just not worth it for them to be drivers for them right now. So incentivizing drivers to come back has been a big issue for Uber. The stock up today, though, 43.5, up about 1.75 or about 4.25%. Good for 581,000 contracts. That's some paper for Uber. Number 3, yes, I said number 3, it's Tesla. 594,000. So something has snuck into the top 2 there. What is it? Let's find out. Number 2. Yes, I said number 2. It's Apple. Get this, listeners. Only 625,000 contracts. That's like first couple hours of the day volume for Apple out there. So Apple looking very light. That means number 1 is something else entirely. What is it? Well, we already had AMC. Your Hood's way down there. It's not any of those. It's not Uber. What could it be? It's AMD stealing the top spot out there on our most actives today with 1.15 million contracts. Listen, that's some paper out there for AMD. The stock taking a bit of a drubbing today, off about 5%, trading right around 112, 113 out there. So obviously not a good day for AMD out there. Before we talk about, we're allowed of talking about good days, let's see if July was a good month. Yes, the numbers are finally in, hot off the presses from our friends at OCC, the Options Clearing Corp, for the month of July here. And yeah, July was a banger. Total volume for July, again, since the year started, everyone's saying, hey, can this one lot Robinhood meme stock, call it what you will, can this options volume party continue? And the answer through July so far this year is a resounding yes. July volume up nearly 30% from a year ago, 29.2%. That is the most active July on record. So pretty much every month this year has been the most active, whatever month it is, the most active February, the most active March. This is the most active July in the history of the business. It's the fifth highest overall month in the history of the business as well. I believe last month was the second highest. So still putting up some record numbers, if not quite the top of the heap out there. So total volume from OCC for July, 795 million contracts, up about 29.2%. This is the interesting part too as well. Year-to-date ADV through July, 39.2 million contracts. It's up 38.2%. So again, everyone who thought, we can't possibly meet or exceed those volume levels from last year, we stay on this pace for the rest of the year, which admittedly is a pretty strong pace, but if we stay anywhere near this, we're going to be up nearly 40% from this time last year. So it's just insane volume we're seeing out there. Let's drill down a little bit more because obviously OCC clears a few other things outside of options. Exchange listed options, 790 million contracts, almost exactly. Again, up about 29.2% from last year. Drill down a little bit farther. Equity options, that was 749 million contracts, up 28.6% from last July. That number includes clear ETF options. If you pull those out, that was 211.1 million. That's only a 2.2% increase from July of last year. Interesting. If you also pull out index options, that was 41 million almost exactly as well. That's up 39.6% from this time last year, which again, index options have kind of been a bit of a dark spot for the industry. So nice little ray of sunshine there for index options. And again, year-to-date ADV for options is 38.9 million contracts. Also interesting, futures. Total futures cleared by, remember, the only futures that really clear at OCC are VIX futures. So 35.4% increase from July of last year, 4.7 million contracts. So that's kind of interesting. Mr. Meatball, any surprises in there? Are you surprised like I am that both index options and VIX futures had a bit of resurgence last month? And any other numbers there coming to surprise you, sir?
I am surprised by the VIX futures. That surprised me a bunch. And index options, not as much. We've seen SPX really pick up over the last few weeks. There's definitely been a lot of trading there. VIX options, not as much. They continue to kind of peter. Equities, no shock at all. We continue to see on a daily basis some random equity just absolutely blow up and then have its options explode up and down 50 million ways. So no, I'm not completely shocked at all. The names that you'll see that get all searches and options are just silly sometimes. And when a stock starts to move, you see options explode on it. Uber is a classic example, right? Traders are all over that one today. It did not trade that much last week, but it's like this game of volume whack-a-mole for individual equities that is driving up individual total contract volumes on a monthly basis. Makes me want to own some of these options exchanges because they're definitely cleaning up. I don't know about SIBO, but some of the other names that are out there like ICE, I see kind of interesting because of all the options volume they're doing. Our friends on Miami, in Miami, who are actually in New Jersey. They've got to be happy campers right now.
I was going to say, our MIAX friends definitely picked the right side of the bet to be on out there. They're putting up some numbers out there as well. Speaking of numbers, we still have a lot popping off on the earnings front. A pretty hot and heavy day here for week here for earnings, really. Tuesday, we had Alibaba, BP, Under Armour, Eli Lilly, Activision, Blizzard, and Lyft. Wednesday, GM, CVS Health, Roku, Uber, Marathon Oil, and EA, aka Electronic Arts. Today, Moderna, Viacom, Square, Beyond Meat, and Shake Shack. And tomorrow we have DraftKings. And luckily for you listeners, we've got the earnings move results, and earnings season reports hot off the presses, right from our friends over there at Oratz, right before showtime. Let's dive into it together and see what we see. Let's start off with Etsy. They were yesterday after the bell. They were pricing in. They were at $202, pretty much exactly at going into their announcement. They were pricing in 8.5%. They delivered 7.6%. So once again, listeners, we have this, this vol apocalypse here. Roku, I do believe they're pricing in a little bit of juice. They were at yesterday after the bell. They were pricing in, they went into their announcement, I should say, $420.32. They're pricing in 7.4%. They delivered 5.5%. So another disappointment. EA after the bell yesterday, $139.91 going into their announcement. They were pricing in nearly 5%. They delivered 1.5%. So, Volmageddon, here we come. Uber was going nearly $42 going into their announcement. They were pricing in 6.3%. Get this, listeners. They're pricing in a decent amount of juice. They've delivered so far 1.7%. Now, they have moved around a little bit, so that frame of reference may change a little bit if you wait a little bit. But still, the initial blush on that earnings rose was not a lot of juice at all. Moderna, they were pricing in some juice as well. Hard to argue against it. There's been a lot of kerfuffle on the vaccine front of late. 419, pretty much exactly. They were popping off before the bell today. They were pricing in 7.9%, nearly 8%. Get this, listeners, they delivered 0.4%. I mean, this is kind of what we've been talking about since the pandemic started. It's just any vol you price in outside of the aberrant Nike or a few others that really crush it. Outside of those, everything is just squeezing the vol to death. So far, the season right now, hanging out at a whopping 77%. So, yeah, not a lot of juice. Actually, this week is the first week in a while that we've seen a little bit of outperformance, 110% for this week. That's good, but only 200 or so names have reported so far, so there's a lot more to go. But 77% if you average in every week so far this season. Week 1 was 79%. Week 2, an apocalyptic 56%. Week 3, 65%. So far this week, actually looking all right. Obviously, outside these big names that I talked about, there have been some others that have at least met their straddle. But overall, the average is still pretty dismal, 77%. Let's look really quickly here. Beyond Meat today after the bell, 122.80 is where they were as of this report. They were pricing in $10.71. Get this, listeners. In the past, they've moved $20.10. So they've cut their straddle pretty much in half out there in Beyond Meat. And given these numbers, it's hard to argue that that's not correct. Shake Shack today after the bell, 92.25. They were pricing in $7.34. In the past, they've moved $8.36. If these numbers are correct, they probably should hit that straddle more. DraftKings, they're popping off tomorrow before the bell, $48.70. They were pricing in $2.84. In the past, they've moved $3.74. So they've come for all of it so far, listeners. And so far, I guess you can probably argue that they need to come for it more. Mr. Meatball, what are your thoughts here? Any surprises from you on a lot of these big names we're talking about? EA, Uber, Roku, Etsy, etc. Still a resounding crushing for the vol so far, sir.
Yeah, we've not seen the huge moves out of a lot of these earnings names. They've not done a lot. The only one that really stands out that actually blew the doors off of earnings was AMD. Apple did nothing, Amazon as well. Apple, Amazon, maybe Google a little bit, but for the most part, these earnings have been a resounding snore, a resounding snooze. We have not seen a lot out of it, and I'll be interested to see when that eventually does change.
And now it's time for the show to change into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's unleash our Eye of Sauron, see where it fixes its gaze today. Always fun to see some newcomers popping in here. Let's kick things off in the hot and heavy land of Rivliv, aka Revolve Group Inc. This is a provider of women's apparel, footwear, accessories, and beauty styles. So I'm sure Mr. Meatball is very familiar with this one. Again, ticker symbol RVLV, trading today 59 and about a half, off nearly $12 or nearly 17%. So not a great day for Rivliv, I guess the ladies' apparel business and accessories, not exactly lighting it up. Over the course of the past year, though, it's been a bit of a banger. This name is up 253%. A year ago, it was trading $17, pretty much exactly. Kind of drifted in that range for a while, all the way till November. Then it started threatening 20, finally hit 21 in November. And then it kind of kept drifting north. By February 4th, it was actually trading 39. So it had a nice little run there from about 20 up to nearly doubling pretty much, or actually more than doubling if you count from the 16 pretty much level that it was up to about close to 40 in February. And then it kind of hovered there for a bit. Then it shot up to 53 in March, kind of bounced around those levels for a while, then got back up to 58 in May, kind of dropped it off again down to 41. And right after that, must have had a bad announcement back in May. And then they kind of climbed yet again back up to 72, almost $73. And then they kind of have bounced in this level. In fact, they were trading about almost 75, their 52-week high of 74.82 just a few sessions ago. And since then, listeners have taken a bit of a drubbing, like I said, off nearly $12 today. So the ladies' apparel biz not looking too good right now. Let's see what our Eye of Sauron found out there. You might think, oh, this thing's selling off like crazy. Maybe somebody's scooping some puts or something. No, it's actually the opposite. It's the Rock Lobster's favorite trade here. It's a pretty sizable line in the sand being drawn in these puts, Mr. Meatball, to the tune of the AUG 50 puts. So I said we're just shy of the 60 handle right now. So these are about $9 and change out of the money puts here. Going up on the bid, crushing it nearly 10,000 times, 9,885 times. For 65 cents. That's about a 70 vol, 69 to be precise out there. So that's a pretty aggressive crushing here post earnings. Again, they had earnings, looks like this morning. The next earnings announcement is not till November 9th. So this is not an earnings related play outside of what's going on today, obviously. So they're coming in saying, this vol's getting crushed post earnings. If I can get a nearly 70 vol, I'm going to take it. Now I'm going to draw a line in the sand at 50. Like, as we just said, a year ago, it was trading $16. So that 50 strike may not seem that aggressive right now, but it was trading, 41 and change back in May even. So this thing can easily break through that 50 handle again. Mr. Meatball, what are your thoughts here on a pretty sizable and decently aggressive line in the sand being drawn immediately post earnings in your favorite name, sir, Revolve Group?
What's funny is I'm extremely familiar with Revolve Group. This is, as many of you know, my wife runs the website bigblondehair.com. Revolve is one of her biggest partners that she works with on the site. She actually was giving us all kinds of insight when it IPO'd about 3 years ago. I'm not shocked to see it sell off like this today. It's got a very similar business model to like an Amazon. So when Amazon missed, I said, Revolve's going to miss. They had great earnings. It's funny. This is my wife's first real foray into investing. She bought, 100 shares. She smartly sold off half of her position when it got up into the 60s and is now sitting on a gob of money and some stock for free. She said, the earnings were great. Why is the stock down? And I said, aha, welcome to trading. But I think that this is probably an interesting opportunity to get long. I'm not surprised to see somebody come in and dump these puts. That's an extremely high volatility. I'd want to own Revolve at $50 myself. I think that you'll probably see this have an Amazon-y type bounce where it'll get back to $64, $65 in somewhat short order. So I like the play. I like the yield play. You're collecting a lot of premium for just about a 2-week hold, and you're still a good 15% out of the money. I think that's not a bad return. 1% return in over 1% return in 2 weeks to be long. Not a bad little yield play and a decent line in the sand.
There we go. Mr. Meatball likes it. His wife schooling him on how to do that stock business out there. Speaking of schooling us, I am pleased to announce that we are joined better late than never by the uncleest of Mikes. He's out of breath because he raced to make it back here for the show. Mr. Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the program, better late than never. And B, what is lighting up your tape out there today, sir, in this most Uncle Mike type of days?
Yeah, you're not exactly lying about me being out of breath trying to be here, but that's another story. And besides, you guys take my breath away anyway, because aren't you, Mark, the world's the sexiest man in options? Isn't that the case?
Sexiest man in options. Yep, I keep winning it year after year. It's amazing.
That's something else. What an honor to be in your presence. But yeah, anyway, markets are bullish today. It's a day to where S&P's up a little bit. It's not up a ton. I hate to push too around the block this early in the show, but I think non-farm's I could see definitely some movement tomorrow with non-farm payrolls coming out. I see that happening. And I think that it feels like the Delta variant, at least from the market standpoint, is kind of a non-issue, is what it's looking like more and more. It's definitely a big political issue, and that the Florida governor, I believe, said that he still does not want masks anywhere, has the mandate against mandates, and the Arkansas governor is regretting signing the mandate against mandates. So definitely a hot button issue still, but at least from the market standpoint, we're still hovering around the 1420 level in the SPX. So we're roughly 10 points below all-time highs still, just depending on when you look at it. But we're still near the highs. And for right now, the market seems to be fairly stable, but I still feel like nothing's really happened since Monday. And the concerns with which I had on Monday, a lot of them are still there. And the main concern is that we are kind of hovering around the top of the market, and we're not making new highs, and we're not crashing yet. So with that, it's always a time of concern for me. For the most part, I'm trying to be fairly long premium in that I don't want to get caught short on something, because there's a lot more risk there from a monetary standpoint. And I'm just trying to manage my long premium risk as best as I can. Because if we do have a large movement one way or another, I'd rather be long premium than short premium. So that's kind of where I'm at right now with this market. I think we're still kind of in wait and see mode, even though we are up today, which is a good thing for us bulls out there. And we'll see where it goes.
I'm loving the football debate that's raging in our live chat right now. It's distracting me from the show, but let's keep on rolling here. Let's go. You guys like your bangers here in the odd block. You like to see some people swinging for the fences. We got you. We got you here. We know what you like. Let's move on now next to Outfront Media. This might be a newcomer here to the odd block. Not a name I recall talking about recently. This ticker symbol OUT, O-U-T, trading $23.89 right now, up about $1 or nearly 4% today. So a good day for them. Also a good year for them. A year ago, they were trading, $14.65. So nice little pop, up about 60 odd percent on the year. And they kind of stayed in that range, and they kind of rallied up to about 17 and change in September. Sold off again down below that level, actually, back down to their 52-week low of about 12.88 in October. And they kind of rocketed up from there. By, let's see, December, they were trading $20, and then they kind of bounced in that 20 range for a while. By February, they were trading 22.5. Then they got up to 24 and about a half on March 15th, and they sold off again down to 21 and kind of bounced in these 20 range for a while. They ended up topping out at about 25 almost exactly on July 12th, and then they kind of gave it back up almost immediately down to 21 and change on July 19th. This one's been kind of topsy-turvy of late. And fast forward to where they are right now, again, 23.90, about a buck and change shy of that 52-week high out there. So quite a range, 12.88 on the downside, 25.07 on the upside. What does our Eye of Sauron have for us today? Someone's saying, the hell with that range. I'm going above and beyond. Let's talk SEP 30s, baby. Someone came in today and gobbled up 9,610 of them for 25 cents. They lifted that offer. They weren't playing. These were a nickel at a quarter. And they didn't say, hey, can I get some for 15 or 20 cents? Nope. They just said, I'll take them all for 25 cents. That's a 54 vol if you are wondering. And this is an earnings play. I mean, it's not exactly an earnings play because obviously there's more time beyond it, but there are earnings after the bell today. So someone's swinging for the fences with today's announcement clearly in mind. Of course, if they were just focused on the earnings, they probably would have gone AUG or even in the weeklies, but they went out to September. So they got themselves a little bit extra time for that 25 cents. So Mr. Meatball, a very clear earnings related swing for the fences, an aggressive one, $5 past the 52-week high by September. What do you think of these sizable SEP 30 calls, sir?
I mean, it's a swing for the fence and not a huge surprise. We've seen a lot of these big flow go into way out of the money options. They're paying a quarter, so not a huge outlay for the trader. And if he or she is right, they're going to make a lot of money. Keep an eye on that one.
Yeah, I'm guessing they looked at some of the narrow dated contracts, and because all that earnings juice was in them, they weren't that much cheaper than what they can get for September. So they probably figured they go out to September, they pay a quarter, but they get more than a month on this bad boy as well. So again, of all the crazy outlandish trades we've seen around earnings, this isn't the worst out here. We'll keep an eye on this one. We shall come back to this one as we go out to our final name. This is the newly minted WW International, formerly Weight Watchers. WW sounds like a consulting firm. It just has a different ring to it. It's like when Kentucky Fried Chicken went to KFC. How hip can you be? But regardless, ticker symbol WW. Let's see, trading right now 31 and a quarter. Today up about nearly a buck or 3%. So a decent day for them. A year ago they were trading 24 and about a half. Then they sold off pretty promptly down to about 17 and 3/4 in September. Then they've had a lot of fits and starts. They rallied all the way up to 32 and 3/4 in December, and then sold off again to 23 in January, rallied again to 36 almost in March, then sold off again, 26 in May. So this almost looks like a little biotech chart here. And then it shot up on May 4th from 26.11 up to 37.04 by May 7th. And then it topped out for the year at 41.13 on June 8th. Again, June 8th popping up on our charts, listeners. I need to do more research onto why June 8th was the apex for a lot of the mid-tier of the market last year. And once again, this year, a lot of the names we're talking about that aren't your Facebooks and your FANG names seem like they may have topped out yet again on June 8th. That is very bizarre because this name certainly falls into that category. It hit its 52-week high on June 8th and has pretty much sold off ever since. Got down to about 29.5 on July 19th. Has now been hovering in this 30 to 31 and change range out here. So weird stuff afoot. What did our Eye of Sauron find? This is a little bit a similar trade to what we just talked about, but a little bit longer term and for a heck of a lot more money. We have the AAPL 32 halves going up today for $2.72 through the offer. They were offered at $2.50. This guy said, I'll take them 5,089 times for $2.72. If you're wondering, that's a 60 vol exactly. The stock was a little bit lower and these went up. Stock was at 30.70. And there are earnings coming up on the 10th. So within a few days, this is an earnings adjacent play. I mean, obviously, they're going beyond the earnings here as well. And more have gone up since this first trade. Total of 8,000 of these have traded now. So Mr. Meatball, a little bit of a different play. Our other guy we were just talking about, I mean, he was trading around a 60 vol, close to it too. He was only paying a quarter. This guy is coming in and paying $2.72. A little bit of a different swing for the fences here, sir, and this time in Weight Watchers.
Yeah, well, if my COVID body is any indication, Weight Watchers is going to make a lot of money. So I get why the guy would be doing this trade. It is absolutely a pretty big ball purchase. So I'm kind of surprised by how much they paid and going through the offer, but apparently somebody really had an axe to grind here. So, Weight Watchers should be interesting.
Yeah, we'll keep an eye on this one. I definitely like the quarter kind better than the $2.72 kind, but I can stomach a quarter flyer a lot better than nearly $3. But we'll keep an eye on this one too. I have a feeling which one I will has a better chance, but we shall find out as we keep on rolling. We'll also find out what you folks have on the brain. It is time to unleash the masses. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. First, let's pay off. You guys have wanted us to do another question of the week, another poll. We got one live right now. Went live just before the show, so the early voting is pretty interesting. Mr. Uncle Mike, I didn't get a chance to pick your brain on this. I asked this about the meatball earlier, but our question of the week right now is, of course, around Robinhood. It's dominating the conversation out there. Ticker symbol hood. Options are live right now. The stock was hovering around 60 when we posted this poll. The at-the-money straddle was trading for about $18. That's about a 200 vol. So quite simply, we wanted to know, are people a buyer or a seller at these levels for that straddle? Mr. Uncle Mike, if you have any thoughts, have at it. And B, more importantly, what do you think our audience is voting for, sir?
I'm a buyer, and I think the audience are buyers. This appears like a meme stock of some sort. I'm actually a flatter, meaning I'd be flat on such a thing. I'd prefer not to even mess with something like this. But if I had to choose buyer or seller, definitely be a buyer. I would not want to be short any type of premium at all on Robinhood. It's too memey for me. And I think the audience the same way.
Yeah, we do have a "What Are You Crazy" option as well. I think you're down for that one. So I'll put you down for the "What Are You Crazy" vote. I probably would have to go there as well. But you're right. If you're going to err anyway, and these crazy times, you have to err on the side of buying these stupid, disgusting things because you sure as hell can't sell them naked, at least. All right, but our audience, Mr. Meatball, you said you thought that price was pretty fair for Robinhood, the straddle. Our audience seems to agree with you because they are exactly tied right now between buying and selling the straddle, both at 38.5%. So our audience clearly feels that this is a fairly priced straddle. 23.1% coming in on the me and Uncle Mike tip saying, "What are you, crazy?" Again, this just went live before showtime, so these numbers are going to bounce all around. You got a day or two left to get out there, make your voice heard. At Options is the place to go. We got Mr. Unlimited in our chat saying he thinks Robinhood goes. He also thinks, he agrees with you, Mr. Meatball. He also, thinks Robinhood goes to 100 before the month is done. Of course, we have to take what he says with a grain of salt because he says he's a Packers fan because he's from Detroit. So, Packers fan from Detroit? Kind of backwards. Shouldn't it be a Lions fan? He said Russell Wilson is his favorite QB. So if you're a Packers fan from Detroit, we have to already take your word with a grain of salt as they're debating where Russell Wilson should go in our chat here. Options Queen, Bears fan here, excited to see what Fields can do. Yeah, I'm with you. They're definitely excited for that. Oh, Ghost, this is our Saints fan here. Again, if you guys are in the pro chat, you guys get bumped to the top of the list. We have a lot of other questions here too. But Ghost Saints says, Mark, what do you think we should play? Do you think we should play long calls next year leading up to, I see what you're saying for the mark. Yeah, leading up to June 8th of 2022. Well, that's an interesting question. I do need to do more research on this because it's kind of just a thing that has popped up at me again. It definitely was the case last year that call them the mid-tier, Russell 2000 names, whatever you want, the mid-tier of the market, a lot of it had its apex for a good chunk of the year around June 8th, and then they sold off, right, going into the end of the year. So the headlines was all the FANG names, look how much money Amazon's making, Facebook, all that stuff. You get outside of that noise, a lot of these smaller names had a difficult second part of the year, and it all climaxed around June 8th. And now, weirdly enough, we're seeing the exact same day popping up on our radar again. Do you think we should buy calls? I need to do more research on it, but the last 2 years would certainly maybe argue for that. That is an interesting idea. I think I need to ring up the back tester in chief, the Oracle of New Hampshire, Mr. Matt from Oratz, and I need to have him back test that exact strategy, maybe in like an IWM or like a Russell 2000, something more mid cap heavy, and we'll see how that plays out because that's a weird enough one that it certainly is worth discussion here on the show. Speaking of discussion, here's a good one here from as much as I want to get into your football debate here, Jason Cruz. He says, "Hey guys, longer question, so I came straight to the show rather than the usual Twitter. because hopefully one of you guys can help. I've got a pretty good handle on verticals, so I wanted to dip my toe, into butterflies. And what better way to learn than to jump in? Prior to earnings, I paid 85 cents for the 15, 17, 19 butterfly in SKT. This is Tanger Factory Outlet Centers, listeners. He says the earnings announced, and ever since the stock has essentially pinned to my middle strike. Well, you would think that would be fantastic, right? That's kind of what you want. That's a fairy tale development for your fly, pinning at your short strike. But he says the value on the fly, on the other hand, has not changed. Can you give any insight into what happened? I've got about 2 weeks to go, and do I just need theta to do its thing? It also looks like the implied vol has not moved from around 45 to 50%. That seems to be the real head scratcher. Thanks for all you guys do to help the beginners. Mr. Meatball, maybe we'll start with you. Interesting question. This guy's putting on a fly, going into earnings. He kind of gets the development he wants, which you would think the textbook definition of a fly is you move to your short strike and sit there, and that should be a winner chicken dinner for you. You had earnings already, so the vol should be coming out, but he's saying that's not happening. So any pro tips here for Jason about what to do with his fly outside of sit there and be patient?
Yeah, I mean, sometimes that happens when vol doesn't go down. A lot of times these flies actually have a sneaky short delta, and it can create some problems for you. So yeah, this is one where you're going to have to wait it out to see if you get paid. And if you don't want to do that, then take your money. That's one of the problems with butterflies is they are a lot cheaper, but they also can do this to you every now and again.
Yeah, it's like the butterfly effect, dare we say, out here, because it does happen a lot. There's a lot of moving pieces. That's why I sometimes lump butterflies. They are very straightforward, and people, they're kind of thought of as like a beginner strategy, but I kind of lump them in the 201 level because they have this kind of element to them where things could happen the way you want and the way you anticipate, and yet you don't get the bang for your buck that you're hoping for. Mr. Uncle Mike, you're a bit of a fly guy every now and then. What are your thoughts here for Jason? And he's kind of left with the butterfly effect. He's got to twiddle his thumbs, sir.
Yeah, I've been there, done that. I was actually there about a month ago when the market went up too fast for me. I had to do that. And so it's a tough spot to be, but you're essentially in a short straddle right now, or short straddle right now. Just you're hedged, but you're just hoping for no movement, and it's a tough spot to be. Typically, if I'm doing a butterfly, I'm usually doing a bullish butterfly, and as I'll do it, I'll buy one out of the money, and then once it gets to the first long strike, then that's usually when I'll try and get out. Sometimes I'll hang out for an extra day or two, and if it's not that much, but for the most part, it's a lot of times it can be tough if you're right in the middle like that. Now, the good news is that you have 2 weeks till expiration, so it's not a ton of time, but you just have to kind of ride that one out. The other way you could perhaps hedge it a little bit is maybe bring the wings in a little bit. I mean, there's some things that you can do on it, but then ultimately you're just creating a new trade from something that you didn't really want to get in, or in a situation that you didn't want to get into in the first place. So I think you need to ride it out or get out personally.
Yeah, I'm looking at it right now. SKT is hovering at 17.05 right now. So he is exactly in the middle of his fly strikes. Yeah, this is one of these ones, Jason. It sucks. I'm with you. But you got to kind of just twiddle your thumbs or get the heck out of Dodge. I don't think you want to get the heck out of Dodge because you're sitting on something. You kind of have to let theta do its thing. You're right. You think it would have done more for you. Maybe this is also a lesson. Sounds like you were playing the earnings. If you are going to play the earnings, maybe don't go so far beyond it because now you still have the time, right? So you're not going to get all the bang for your buck. If you had something that expired this week and you were more directly playing the earnings, then you probably would have had a much more of a bang for your buck right now. Would have been pretty much close to your max profit at this point. So that's another lesson with the flies. I get it. It's tempting. You look at it and you say, oh, for a few more cents, I can get all this extra time. But that can sometimes be your enemy with a fly because now you got to sit there and twiddle your thumbs and you don't know. You hope it's going to hang out at 17 and it's looking good right now. So if it hangs out here, you're going to get some nice juicy decay. Give it a day or two, maybe heading into tomorrow. If it's still here, you'll have some decay. You'll get the weekend come out of it towards the end of the day. At the very least, you should be able to take it off then for a little bit more money. But yeah, I think we've all been there, Jason. The butterfly effect can be a killer. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Has that happened to you, listeners? Have you had this moment of the butterfly effect where you get the move you wanted, but then you don't quite get the bang for your buck that you wanted? Hit us up. Let us know. Share your tales of pain and woe so Jason can not feel so alone out there. It can be a lonely feeling sometimes. And you're looking at it, you're like, hey, I did everything I was supposed to do. Why aren't you playing ball with me? So, yeah, we feel your pain there, Jason. Let's go around the block. Now, Mr. Uncle Mike was excited to get to Around the Block, so let's start with him. Mr. Uncle Mike, sir, what are you keeping an eye on for the rest of this week into the weekend outside of can SKT move away from that middle strike?
Of course. Just watching the non-farm tomorrow, and just the fact that we are close to all-time highs. I still have a cautious stance on this market. I tweeted about this the other day, and that even if you're the beauty of options is that you can still be bullish and then not get bit too badly if you're dead wrong on it. You just have to shift your risk and manage the time decay on it. And that's what I'm trying to do the best I can right now. So watching non-farms, watching all-time highs, and watching Peyton Manning go into the Hall of Fame this weekend.
Don't you fire up our football chat. They're already going on about Russell Wilson. Will he go to the Saints? We got a lot of back and forth. So you throw in Peyton Manning in there, you're going to fire them all up again. All right, Mr. Meatball, same question for you, sir. What are you keeping an eye on for the rest of this week, at least until we can gather here together on Vol Views again tomorrow, sir?
Yeah, I mean, we've non-farm payrolls in the morning. We have a lot more earnings coming out. We have, what's going to happen with the Delta variant and what kind of mandates are coming out. Those are affecting the market. And I'm watching the VIX. Is it going to finally plummet the way I've been expecting, or are we going to get that explosion? It looks like it wants to make a major move. I just don't know which way. And then finally, bonds. They're down a little bit today, but let's see what direction it goes. And finally, the Robinhood AMC GameStop trifecta. I'm going to be trading that left and right.
Callers for credits. You can't look askance at that, listeners. Unfortunately, that music means we've come to a close, at least for this show. But if you need more in your ear holes, don't worry. We'll be back in exactly 30 minutes with the once and future Dr. Vic's. We're going to talk all things futures options related out there. I think some of that small cap action, equity action is certainly going to be there. Going to talk to Skew. Maybe we'll find some other callers for credits in like the ags or the metals. Who knows? You got to tune in to TWIFO every week to find out. But before we go, let's go back around the horn. Let's start with the greasiest of meatballs. Mr. Meatball, sir, if folks want to hit you up to discuss callers for credits in Hood or anything else, where should they go? What should they do?
Go to optionpit.com and sign up for the VIX Edge. That's my daily newsletter on VIX and volatility. Yesterday, I talked about the volatility of Apple and some huge straddles that we've been seeing trading in Apple. And then most of the time, I'm just talking about VIX, though. And follow me on Twitter at OptionPit.
Mr. Uncle Mike, same question for you. And you have indeed fired up our chat. They mentioned that they love the Mannings, especially Archie. Isn't he the latest addition to the quarterback generations out there? So if folks want to discuss the Mannings with you, Uncle Mike, where should they go? What should they do?
By all means, feel free to follow me on Twitter at Mike TOSAW, or check out my website, stcharleswealth.com. I try and put out a lot of as much content as I can in both those areas. And if you want to talk about the Mannings, or you want to talk about the fact the Mannings are going to be on Monday Night Football this fall, feel free to give me a call. I'll talk football all day long with you.
He will. Don't test him. He played for the Bills for a bit out there, so he likes his football. He knows a bit about football. You can also call him up to talk about options. Find out more at stcharleswealth.com. Give him a follow on the old Twitters as well. He's blowing it up at Mike TOSAW. TOSAW is the place to go. On behalf of the unclest of Mikes who joined us better late than never, and the greasiest of meatballs, and indeed myself, thank all of you out there for downloading, streaming, and subscribing. Remember, our polls are back. Go vote in our poll over there at Options. Make your voices heard on this crazy straddle out there in Robinhood. You love it. You hate it. Thoughts about the butterfly effect? Has it ever bit you? Hit us up with those as well. Back in 28 minutes now with the once and future Dr. Vic's. And then, of course, back again on Monday with another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.